one question on everyone's mind as of right now. One and only one that must be answered, and that is, has the bull market begun already, or are we still waiting for it? That is the subject of today's very special episode of Shut the Fud Up. Here we go. So glad I had that intro that was just ready to go, because I realized right after going live that I had my shirt on backwards. I was like, man, this shirt feels really weird here. It's very tight in the neck. I wonder why. Like, my neck get fatter or something? But nope, I just had it on backwards here, because I always take a shower before these streams, and I'm always in a rush right when I get out. Anywho, can't spend too much time with you guys here today. I know we don't want to take up too much time because, you guys probably want to go watch the Hex conference on Matty Allen's channel, which I was a part of last night. A special thank you to Matty Allen and to Tam Tam for getting on there with me. But what I said on the stream yesterday is that I was going to do a little stream today to answer the question, has the bull market begun yet? Because we have seen some good stuff happen so far this year. I mean, I certainly didn't think that it was going to be anything good happening this early. I was thinking, and I still kind of think this, that Q1 of 2026 is going to be a tough one. I still think that. But we had a really good 5 days in a row. And with those 5 days in a row, what they showed us there is that's how it should feel. That's how a typical bull market goes, because what was going on is every single coin out there, all of them were going up together. And that's the normal world of a crypto bull market. I see you guys are piling in here. Go ahead and get piled in. We're going to take a look at the things that we always take a look at on every single one of these streams, starting with what's the market doing? And it seems that it's taken a retrace here. It is gone. Bitcoin has gone back down below 91,000. Don't think it stays there for long, though. I mean, I think it shoots back up. What we're going to be seeing in the normal crypto world is precisely this here. What we're going to be seeing is it takes 2 steps forward and then 1 step back. I mean, look at where it started January out with. It was at 87,000. Then it went almost all the way up to 96,000 practically. But right now it's kind of resting at 90,000. Or it almost went up to 95. Almost went up to 95. Now it's kind of resting about 33% of the way to where it was. You still see a lot of this sideways chop action. I've explained what this is here, why it's doing this. This is because it's hedge funds doing their basis trades on Bitcoin. And that was all of the positive action through 2025. Yeah, that 2025 that Leah Halpern said was just this unbelievably great year where everybody made so much money, but you didn't because, 1, you were too dumb to take profits, and 2, you were too dumb to invest in anything that was going to make money. I mean, it was supposed to be obvious to you guys that Zcash was going to go up, right? Even though the fact that nobody was talking about Zcash until it started going up. But, oh, yeah, you should have known. Arthur Hayes is out there now, who I like. But he's out there saying, oh, we had a great alt season. Look at all the money I made with Athena, with EtherFi, with Hyperliquid. Arthur, how come you listed off all the coins that you're a private advisor for? And when were people supposed to know about those coins and get into them around the same time that you did, when the only reason you did is because you had a private connection being the advisor to them? But 2025... it's all just hedge fund basis trades. You pull up your Bloomberg terminal, you take a look at who were the top 5 buyers of IBIT, because IBIT was the thing that was moving this chart throughout all of 2025. But when you take a look at who were the top 5 buyers, they were all hedge funds. So anybody wants to debate me on this here, I don't think anybody does want to debate me on this because they ought to know for a fact that they will lose because the Bloomberg is on my side and it tells the truth. But they want to say, oh, plenty of retail was already here. Matter of fact, there were 2 idiots in a Twitter Spaces that made that statement to me. Oh, there's plenty of retail here. And man, I cannot wait to call those people out by name. And I'm going to do that. And I'm going to just run them through the mud and embarrass them so bad that their reputations should be permanently destroyed after that. You know, while I got this tab open, what I want to do also is take a look at the, what's it called? It's on macro trends. We'll do federal funds rate versus 3-month treasury. That's something that's worth talking about. So we'll talk about this. Talk about this later. Ethereum, surprisingly, knock on wood, is holding a little bit of its gain. Like this thing was below 3,000. Now it's comfortably above it. That's pretty cool for a piece of trash like Ethereum. XRP has been having a pretty good run as well. Even Cardano here. Impressive how it got back a good 20% so far this year. The one I'm watching, though, is that World Liberty Finance, because, again, that's where the insiders are all doing their trading. But for the most part, everything is still kind of flat. Like some of the projects that I watch that I would expect to be the big runners, just because they have all the crap that Wall Street wants, like steady cash flow. They're collecting fees. They do buybacks like stocks do, even though it's not like stocks. The new investors from TradFi would be looking at that stuff and would be interested in that stuff. So I would expect these projects to be tracking. And as I'm watching these projects, ones like EtherFi, I'm noticing, well, there's not much going on with it still. So a lot of that story that they say of, oh, well, the coins that are going to do well are going to be the ones that collect fees, we've not really seen that happen yet. And again, it's because the fundamentals have nothing to do with how well a crypto asset does. Tokenomics have nothing to do with it either. I mean, it was what I had said last night at the Hex conference. There's only one thing. Well, I shouldn't say it's not the only one thing, but there is one thing that makes crypto go up that is more powerful and influential than anything else. It accounts for 95% of all the price action, and that is money printing and credit creation, the overall liquidity situation. I want to see something impressive here, though, something that is giving me hope. Sonic had been getting kicked in the balls ever since it's been launched. So far this year, that thing is up 23%. So when you got something like Sonic and you got something like Cardano, I mean, Sonic is a useful thing. Cardano is a useless thing. But both of these things are going up together at the same time and by the same amount. That should tell you something, that tokenomics doesn't matter, fundamentals doesn't matter, utility doesn't matter. None of that crap matters. And for God's sake, you know what really doesn't matter? Narrative. So help me to Christ, if I hear another person say the word narrative again and say, well, the narrative is this, the narrative is that, I am going to just kick an innocent old man in the balls. That's how much it feels like nails on a chalkboard to my ears. Let's have a look here at the overall market. What's been going on so far? I mean, all that this shows us for ETFs in the last 30 days, which includes a lot of last year that we're not that interested in. That greed and fear index really shot right back up. It got right out of the fear territory very quickly and shot right up into neutral. This will be interesting here. I think that maybe the greed and fear index probably be a lot more volatile this year than it was even last year. And let's see, everything we want to look at is the Bitcoin dominance. Everyone's saying, oh, that thing is dropping like a rock. Does this look like it's dropping like a rock here? This is the past 30 days. It looks incredibly flat. Guys, don't be getting too excited by all these other clowns that are saying, alt season's coming. Alt's just around the corner because Bitcoin dominance is dropping. Man, that sounds like something Ivan on Tech would say. He'd get on there and be like, oh, yes, oh, yes, oh, yes. We can see that the Bitcoin dominance is dropping. So that should mean that alt season is just around the corner. And if anybody tells you anything differently, well, it's all just fugazi. And oh my gosh, Pulsakins, I don't understand why your coin is down. I mean, yes, you guys are incredibly gatekept, but I don't know why your coin is down. Your coin shouldn't be coming down, especially when alt season is right around the corner, even though Bitcoin dominance hasn't really dropped yet. It's been incredibly flat. Oh, but it's all just fugazi. Oh, I forgot we should push the button. That's what something you would expect to hear Ivan on Tech say without taking a look at what he's even talking about. Even looking at it from the 1 year perspective here, this looks incredibly flat. All right. I expect amateur airs out of idiots like DZ over at Piss Cover Crypto going, oh my gosh, I can't believe it. Looking at the Bitcoin dominance, it appears it's going to be going down. But oh my, I don't know yet, man. I guess we could be seeing an alt season. But you know something? What I'm really waiting for is I'm waiting to actually get the returns that I promised all the viewers were going to get when we said Ethereum doing the merge was like a triple happening. Oh God, I cannot. I'll never forget as long as I live. All those idiots over at Discover Crypto said that the merge happening with Ethereum way back in 2022 was like a triple happening, and it was going to make everybody rich. And you know what happened? The 2022 bear market, and Ethereum went down below 4 figures. That shows what those idiots over at Piss Cover Crypto know. And so help me to. Try to calm down here. Calm down. New Year's resolution is to be less angry, I guess. Keep that for all of 7 days. Let's have a look here at the RH ecosystem. So, not a great day today. It is a retrace, but remember, with crypto, everything is 2 steps forward and 1 step back. So far this year, I mean, this is the last 7 days. It is the 7th day of the year. So far this year, it is up. It had been up a lot more. Like we were looking at 30% on a lot of these things. But a lot of that 30% got chopped in half just with today's action. But we're still 1 step forward. This is normal crypto action under normal markets, not really bull markets or bear markets, but just markets in general. This is what you can expect. And in the real bull market, what you'd see, though, is these numbers that we're looking at here for the 7 day would be a lot higher, and for the 1 day, they'd be a lot higher as well. That is something to be looking forward to this year. Now, let's have a look over here in TradFi with CNBS. What's going on here? Well, there's a lot of news going on here with the president. I think you're going to see the president in the news a lot more this year than normal because, well, I'll show you this here. This is why. Not that. Where did I have it? Here it is, yeah. Because if he doesn't make things happen, he will lose the midterm election. And if he loses the midterm election, that means that impeachment proceedings, impeachment articles will be filed. All that lawfare is going to come back. They are going to try to put the president in jail. They will absolutely try to do that. So, the president knows that his life is on the line, or at least I hope he knows that his life is on the line. If he doesn't get his head out of his butt and fix this economy, particularly with inflation, if he doesn't make life more affordable for the everyday person, well, then he's going to be in a lot of trouble, and so will crypto as well. I mean, the Clarity Act, I think that is coming up for a vote next week. I don't know if it actually gets passed. I mean, I've kind of made a bearish prediction on the end of year show with Fast Abdul that I think the Clarity Act doesn't get passed, that'd be a very bearish prediction in this sense that, like, if it doesn't get passed real soon and it doesn't get its way worked in before midterm election campaigns and the Democrats win, we're probably never getting that Clarity Act for several years, because what's happening there then is the Democrats are going to block everything that Trump would want on his agenda. This is something he wants on his agenda. They would block it. And also, crypto, I think, would be in a lot of trouble when the Democrats take that much power back, because they're thinking Trump is abusing his power as president to enrich himself in the crypto markets. So there'd be some serious investigations, all sorts of FUD. If they win in 2026, then hands down, without a doubt in my mind, 2027 is a horrific bear market year. Absolutely horrific. So you'll see the president in the news a lot more and doing a lot more things that are populist in nature, such as he wants to ban large investors from buying homes, getting the Blackstones out of the housing markets. Now, is this going to fix the housing markets? It will help, but it won't totally fix it. There's a lot more that needs to be done, a lot more needs to be said that I don't really have like the time or the energy to talk about today. There's also something else here interesting, is that he says he will not permit dividends and stock buybacks for defense companies. That story's of interest to me here, because I'll tell you, for all of the talk that he's like this great right-wing capitalist, he does a lot of socialist stuff here, and this is one of them. And here's what it says. He will not permit defense companies to issue dividends or stock buybacks until those firms address his complaints about the industry. So that'd be like Lockheed Martin, General Dynamics, Northrop Grumman. And let's see, what are the questions that he has here about it? Not producing enough great military equipment rapidly enough. Okay. So some of this, it sounds like a defense thing, but it's also an economic thing here. Because you see, why are we going to war with Venezuela, or not going to war? Why are we taking military action in Venezuela? When you're in the business of war, like those companies are, well, then peace is a working capital problem. That comes from Doomberg, who's just been way ahead of the game on all of this. And he says that a lot of these companies, like so much of the economy, is dependent on a war machine going. And in order for the economy to keep humming along, or for that portion of GDP to not be compromised, there needs to be demand for what they produce. So if they produce weapons, if they produce tactical gear, if they produce radar, sonar, submarines, whatever, then there needs to be demand for it. Yeah. There was another story I think I saw earlier. Oh, yeah, Greenland. This is going to be a story here, which is also related to the Venezuela thing. Because why are we talking about Greenland? Why is it that they are thinking they want to, like, seize Greenland and like some sort of imperialist action? It's the Monroe Doctrine in action here. But like, why is Greenland in the news? Why is Trump so interested in it? They all say, well, it's for national defense or something, but really what it is this right here. It's all about certain minerals such as graphite, titanium, and rare earths as well. There's a lot of that in Greenland, so that's why there is a much greater interest for the United States there than had been previously discussed. And you probably all thinking, well, what was the deal with Venezuela? Like, why did we remove that guy here and everything? And a lot of people think, well, it's oil. And you see a lot of the stuff that you see here on TradFi in particular is all about oil. It was all about the oil, which I can just debunk that for you easily here, is that, no, it was not about oil. All right? Because it would be a lot cheaper to produce the oil here than to go ransack another country and plunder it. All right, a lot of people were saying that about the Iraq War. Oh, it's all about oil. No blood for oil. I remember that. I think it was in high school back when the second Iraq War in 2003. Yeah, I was in high school when that was occurring, and that was all I ever heard was no blood for oil. And I think that they said that during the first Iraq War under George Bush the Elder, and My investigation of it is just always prove this here is like, no, it's not about no oil because it is so much cheaper to just produce the oil here, not just in terms of money, but of course in terms of people's lives, because war is very expensive, and not just in terms of money, but also in people's lives. If all you wanted was oil, you could just produce it here and nobody dies and you save a ton of money. So, no, it's clearly not about oil. In fact, the majority of the United States' foreign policy has been about policing the region of Eurasia, a little space, big region of a couple of countries in the two continents, Asia and Europe. It's where imagine a Venn diagram where they kind of cross over. Not so much like, they are separate territories, they're separate continents, but the crossover between the two of them culturally and demographically is a lot of the same. So all of it has been policing that region. That's what U.S. foreign policy is all about. That's what this Venezuelan action was all about. Because what was really going on here is that Venezuela was an enormous ally to the BRICS alliance, which was an enormous threat to the strength of the dollar. That's all that it was. That's it. It's all about protecting the strength of the dollar. Same went with the Iraq war way back in 2003, is that it was about protecting the strength of the U.S. dollar because Iraq wanted to have their oil priced in euros as opposed to U.S. dollars. All about petrodollars. Speaking of dollars, look at this here. Now, here's kind of like why the price action today in crypto has been not great. Look at the strength of the dollar compared to other currencies, of course. When you look at this here, it had a great big spike up a little bit earlier in the year, 2 days ago, and it's sustaining that spike up, going to 98.7. I do think this thing gets back over 100. Now, some of this here is just a result of the action that was taken in Venezuela. Because we take Venezuela, that does bring more oil to the market, and that more oil on the market lowers the price, which you'll see from price of oil here today. It's down to 56. I think it was down to 55 today. And because there's a great supply, the dollar gets stronger because it buys more of it. Now, that's not what this index is tracking. This index is comparing it to other currencies. But even with that, this is good here. You see, like, what they want to have happen, is also a part of like why the action in Venezuela was taken, was to protect the U.S. dollar that they intend to weaken later against other currencies, particularly the Japanese yen. See, right now, the yen is very weak against the dollar. It's almost up to 157. It gets to 158. That's where we're in some real dangerous territory. 160 for sure is when the Bank of Japan will step in, buy a bunch of yen, and strengthen that currency, and that will cause havoc in the markets, because then all of the leverage out there, all the margin that's measured in yen becomes more expensive to pay back. So that's the carry trade unwind. So to sustain this carry trade, because none of the governments want that thing to unwind. They want it all to keep going. To sustain it, you got to keep the dollar stronger than the yen, but not too much stronger. It's kind of like walking down a very tight rope, very thin line you're walking when you're trying to keep the dollar strong and the yen weak, because you don't want the dollar to be too strong. You don't want the yen to be too weak. Excuse me. Excuse me there. You don't want the yen to be too weak, because that will force the Bank of Japan to step in. They want the dollar to be as strong as it is now, and probably a little bit stronger, because when the new Fed, or when the new makeup of the Fed occurs, they are going to go to town trying to weaken that dollar with all the money printing and all of the interest rate lowering that they're planning to do. So while this doesn't look great, this doesn't look nice, it's not a reason to be totally discouraged just yet. It's not a reason to think, oh man, it's going to be the end of the bull market or the end of crypto. It was DXY going up correlated with the 2022 bear market. It's not going to be the case here, I don't think. So that probably brings us to today's main story. But before we get to that, answering your question, has the bull market begun? We got one more thing to look at here, and that is the interest rate environment. The 10-year Treasury is at 4.14%, so it ticked down slightly. But seeing as how it's just kind of staying in between its range, it's not going to go below 4%, I don't think, at all this year. If it does, I will be pleasantly surprised. I don't think it goes below 4% until the Fed really ramps up the money printing. That's when I think that happens. So I think this stays comfortably above 4%. And that, of course, is like a brake pedal against the risk on markets. Now, other things we wanted to show you here today. This putz, well, shouldn't insult him here because he's not a dumb guy, but what he posted right here is a dumb thing to post, where he says, oh, look at Bitcoin going up and look at gold going down. That's a rotation. What I had said during the Hex conference last night is it's not rotation that happens here. What happens is too many people pile into one investment, and so that crowds out the potential of future investors, so those future investors go somewhere else. So whenever you hear the word rotation from anybody, particularly on X, you can just unfollow that person. If they think that people are selling gold to go buy Bitcoin, well, you just don't know gold investors, because all my time in TradFi, I can tell you for a fact that there's no gold investor out there that would ever buy Bitcoin. A lot of them, they're all just like Peter Schiff, okay? So no, there's not going to be a rotation out of gold and into Bitcoin. But what's going to happen is gold is going to be too expensive for new investors. So all the money that is in the pockets of new investors who want to get into something is going to have to go somewhere, and it's going to go buy the thing that has a lower price. And when you look at the comparison between Bitcoin and gold, I mean, Bitcoin priced in gold is still in a bear market. It's clear Bitcoin has a much lower price. And that's what that's what these investors are going to be more interested in buying, because buying gold at $4,500 an ounce is much riskier than buying it at $2,000 an ounce. So when you hear the word rotation, it's like, oh, the rotation is going to be unbelievable. You can kind of dismiss that guy. It's probably like, it's another dummy like DC that goes, oh my, triple halving. It's going to be incredible. And oh my, what if it's a buy the rumor, sell the news event? I just want to punch that guy in the teeth every time he said that. Every single time. He kept saying that phrase, buy the rumor, sell the news. Dude, nobody does that. It's just a stupid thing that you idiots came up with because you wanted to make yourself sound smart. So it's a stupid narrative is what it is. It's a narrative. Because you see what happens to, what is all this crap that we're talking about here? What is it? First there's price action, and then you idiots come up with a story to explain the price action. It is never it's never the story happens first and then the price action occurs. The price does not move because of the story. You formulated the story because of the price. It's an existential thing where the action precedes the essence. Existence precedes essence. So please, whenever you hear another idiot say, buy the rumor, sell the news, you know that they're just an imbecile that is saying that specifically to try to sound smart because they don't know why, well, they don't know what in the hell is the right explanation for whatever price action that they're looking at. All right? That's what they tried to say was the deal when the Bitcoin Strategic Reserve got announced. Remember that? How Bitcoin went down the exact same day that the Bitcoin Strategic Reserve got announced? You guys remember that? I remember it very, very like it was yesterday. I remember it incredibly well because I think it was in March. Everyone kept saying, oh, Bitcoin, Strategic Reserve. Oh, it's got to put more bags. Trump signs it into law and the thing goes down. And a bunch of idiots got up there and said, it was buy the rumor, sell the news. Okay, well, when was the rumor bought? I mean, when did the rumor even first come out? And then when was it bought? You can't pinpoint to me on a chart when that happened because you don't know for a fact that that's what happened. That's just something you tell yourself to feel better about the fact that you don't know why it was going down on a day that it should be going up. That's why. That's all that it is. Because you idiots were just too stupid to look at the macroeconomic picture and see that the debt refinancing of the national debt is taking longer to roll over. And because that's taking longer to roll over, the bull market is being delayed. All right, broke the New Year's resolution by getting too angry too early. Lark Davis. Okay, here's another reason why the bull market hasn't started yet. That's the answer to your question, by the way. Bull market hasn't started yet. Here's how, is when you take a look at some of the streamers. I mean, Lark isn't doing his daily stream anymore. Because if all we're going to do is just have a bunch of sideways action for the next 2 months at least, or the next 2 quarters, it's very hard to get up here every day and stream. So no hate on Lark. No hate on the man. I can understand. I couldn't do it. I would never be able to get up here and stream every single day and talk about a sideways chart. And what this chart is showing you here, the sideways action is the sideways action I was talking about earlier, where it's all just hedge fund basis trades. Do you think it's any coincidence that it always occurs when the stock market opens at 9:30 a.m.? That's when hedge funds start their basis trades. All right? And that's when they buy a little bit of the ETF, and then they short the futures contract. You see, this is actually something that is going to be in the favor of Hex, Pulse Chain, and PulseX, and even Sonic, and some of the smaller, lesser known, more obscure chains out there, is the fact that we don't have ETFs. That's going to be an advantage. See, all you people in Bitcoin, you thought having an ETF was an advantage. I mean, look how well it worked out for Ethereum. But you thought it was an advantage or it was a good thing to have an ETF. No! You guys are going to learn the hard way that these ETFs were absolute curses because all you did was you just gave Wall Street a way to short your coin. That's all that the Bitcoin ETF, that's all the Ethereum ETF has done, is it's just given Wall Street a way to short the coins. It's kind of funny, like poetic justice, because I remember Max Kaiser and all you other Maxi jerks out there going, oh, we're so great because we're getting our ETF passed and it's being managed by BlackRock, whereas you Hexicans, you guys are under attack from Gary Gensler. SEC is suing you while they're approving our ETF. Like, okay, bro. Enjoy that ETF while Wall Street shorts it every single day at 9:30 a.m. for the next 2 years. The short-sightedness and stupidity of the participants in this market has been some of the greatest entertainment ever. Oh, here's another thing. Another way like the bull market hadn't really begun yet. Take a look at dollar cost crypto and cultivate crypto. No hate on those guys. Like, we got nothing but respect for those guys. But watch their streams and have a little stopwatch out and see how long it takes before they actually start talking about crypto. Yeah. That's how you know we're not in a bull market, because hey, do you plan to have any crypto on your dollar cost crypto stream? I feel like I'm Jeff Goldblum in Jurassic Park. Like, hey, you actually plan to have crypto on your crypto stream, huh? Anybody there? Seriously, you watch those guys. They don't even talk about crypto. That's how you know we're not in a bull market. It hasn't begun yet. Because if we were, there'd be plenty for those guys to talk about. They're not talking about it. All right. Now, why do I say it has not begun yet? I mean, first, let's take a look at what's encouraging and makes you think maybe it has begun. And it's like that line in Mortal Kombat, it has begun. Let the bull market begin. Well, here's kind of like why. When we take a look at the Federal Reserve balance sheet, most important chart in the world, we want to zoom in on it to include the last 5 years. We had it go up all throughout 2021, and it started going down in 2022. Little diversion to the upside. It was a great time to be invested in crypto, by the way. That was March 2023. But then quantitative tightening started doing its job and doing it pretty harshly. I think that the money burning in the quantitative tightening throughout 2022 and 23 was actually faster than it was than the easing that occurred in 2021. They didn't really slow it down until 2025. Didn't really start slowing it down until then. And even with like the slowdown here, though, still, that's a lot of. They opened up the year at 7 trillion, and then they got all the way down to 6.5 trillion. But then we notice here, oh, wait a minute, it looks like there's a trend reversal here. Let's zoom in a little closer and see. I mean, it's just a little blip to the upside here, just a little boop. But as we move down closer and zoom in, well, this looks a lot more like a hairpin than it does look like just a change in direction. I mean, the absolute bottom of the balance sheet was $6.535 trillion. Now we're already up at $6.581 trillion. How much is that? Well, let's see. That was they did about $4 billion in the first week that they begun their easing. Then in the second week, they did, what was this, 20 billion? No, 15 billion. But then they did about 35, right? Yeah, 35 billion in 1 week. Earlier I'd said it was 60 billion. Turns out I was wrong. It was 60 billion in 2 weeks. They were doing 60 billion in a week. Oh my goodness. That would be amazing. But it was 60 billion over 2 weeks. So I was wrong. Sorry about that. They could easily get to 60 billion a week. They could get to 100 billion in a week within the next few months. I do think like if Kevin Hassett steps in, they are doing 100 billion a week. When I see the Federal Reserve's balance sheet expanding at $60 billion per week, then we are in a bull market. All right. When I see it expanding at $200 billion a month, then we are in a bull market. All right, because like with $200 billion a month, I mean, that's going to be at least $2.5 trillion over the year, or close to it. And then at $60 billion a week, that's going to be $3.1 trillion within a year. That's going to make the year just as good as 2021 was. We all remember those times very fondly now, don't we? So until I see that, we're not in a bull market yet. All right. And until I see Dollar Cost Crypto talking about crypto on his streams, we're not in a bull market. No shade on you, Miguel. No shade. And then here's the other thing here to be looking at. Let's see, what's this? Treasuries? No, it's not necessarily the treasuries I'm looking for here. Did I got the stat that I'm looking for? I want to look at the federal funds rate. Yeah, U.S. Treasury yield spreads and federal funds. Hang on. Now, these yield spreads aren't necessarily the ones that I'm looking for. What I want to see is the federal funds rate, treasury rates. Here we go. Treasury yields versus Fed funds. I don't want this bloody chart, whatever this is. This one should be it. There we go. This is what I was looking for. Okay, so what this chart shows you here is the different treasury yields versus the federal funds rate. And why this is important, or what I'm looking for here on this, is I want to see that the federal funds rate is the lowest out of all of these rates. And it should go in, I guess you could say, chronological order from smallest to largest. Like, first should be the Fed funds rate, because that's the overnight rate. That should be the lowest rate. Then the 3-month Treasury, then the 2-year, and then the 10-year. That's how it should be. If it's like that, well, then the world's back to normal here and everything is all hunky-dory. Is that the world that we have right now? No, it's not. Because when we take a look here at this, let's clean this up here a little bit. All right, so the two yields that we see on here is the federal funds rate is the blue line, and that's at 3.64% because it's a range. So not officially at 3.64, but it's within that range. The 3-month Treasury is lower than that. That should not be the case. The 3-month Treasury should not be lower than the federal funds rate, because what that's telling you is that the Fed is behind and the policy that they have is wrong, and they need to cut interest rates more to make the world right. There's another problem, though, and that's this here. The 2-year Treasury is lower than both the Fed funds rate and the 3-month yield. That should not happen. The 2-year Treasury should be higher than the overnight rate. It should be higher than the 3-month rate, because if you're lending money and you don't get paid back for 2 years, you would demand more interest. Now, the reason why the yield on it is lower is that there's more money piled into the 2-year Treasury, because the risks on other treasuries, they view those risks as too high, such as the 10-year. That's why that one, the gold line you see here that I just put on, it's at 4.14%. The reason that yield is so high is because people judge the risk to be too high, and also that's a outlook on growth and inflation for the economy. And then with the 30-year Treasury, that thing is almost at 5%. That's at 4.83. What that's telling you is that people think the risk is too high to be invested in a Treasury for 30 years. And so money that would be in a 30-year or a 10-year is plowed into a 2-year. That's why. And also with the 3-month Treasury, a lot of people are buying into that one because they know that the Federal Reserve is going to be buying them too. And if you have a choice here between investment A or investment B, and you know that the Fed is going to buy investment A, of course you're going to buy investment A. You're going to sell whatever you have in investment B, which in this case is the 10 and 30-year Treasury, and you're going to go buy the 3-month Treasury instead. That's why. So until this chart straightens out, until the Fed funds rate is the lowest rate out of all this, and then the 3-month, and then the 2-year, and then the 10, and then the 30, until this gets straightened out, we're not in a bull run. So what am I doing? Still stacking stables. Still stacking stables. That's all I'm going to be doing. So I'm not telling you to do anything. I'm not saying you should do anything here yet, other than get your taxes done. But I'm still stacking stables because I'm not convinced that the real bull run has started, because they do not start until this gets straightened out. All right. Let's have a look to see if we got any questions out there. I think I saw some. At least one of them there. Yeah, here we go. Cairo. Oh. I don't know if I can pin this. Can I pin this? Should be able to pin this. What does this say? Oh, doesn't want to work today. That's fine. Cairo, doesn't BlackRock and many of its offspring companies own like 60% of all single-family homes in America? It's not BlackRock. It's Blackstone. All right. BlackRock may have had some interest in some real estate investment trusts, but the idea that like Larry Fink was trying to own all the real estate out there was like an urban legend that refused to die, and it was because people got it mixed up with Blackstone. Blackstone had actually been a net seller of real estate in 2024. Maybe it was 2023. But like the big institutions are kind of already trying to get out of real estate, because I tell you, like, here's the deal: is Real estate sucks when you're a landlord. Having to deal with tenants and toilets sucks. You think Wall Street wants to deal with that? No. They're only going to go do something like that if the return on it is greater than returns they can get elsewhere. When you've got a 10-year treasury that's going to give you an easy 4% that you don't have to deal with tenants and toilets for, they would much rather go do that than go buy a bunch of single-family houses. All right. So at one point, it was true that like Blackstone owned a whole ton of these things, but I don't think that like the institutional involvement is as big as people make it out to be. Like what Trump is doing here with his outlawing of institutions to try to get them out of real estate. It's populist grandstanding is what it is. That's what you're going to see a lot of from him lately. You're going to see a lot of him doing that this year. Ryan says, we don't need Powell to go. The Fed will do as it does and print the S word out of USD. I mean, yeah, the Fed doesn't really have a choice in some cases here. I mean, they are trying as hard as they can to resist doing what they know they need to do, but they don't have a choice. As a matter of fact, maybe I should play this here for you guys. This was my conversation that I had not too long ago with Peter Schiff. And you see, I didn't believe it at first here. Like Peter had been he'd been on this train for a while saying, oh, the Fed's going to restart QE and they're going to print trillions of dollars. They're going to buy the long end of the Treasury curve. And I'm like, well, I don't know if they are going to do that because we know Jerome Powell doesn't want to do it. We know that like Lisa Cook and some of the other governors on the Fed Board of Governors and some other members of the FOMC are not too fond of doing that. And everybody, like even the doves on the Fed have said, oh, well, we would never do QE. So I'm not so sure that like it happens as like a sure bet like you think, Peter. I'm not so sure that it happens immediately and at the scale that you think. And here's what he had said to me. So let me pull this up here. This was in a Twitter.
I just had a question.
I could find the exact moment where he said that.
Doves right now, which are Waller, Bowman.
Let me know if you guys can hear it.
And Mirren, and it's possible that the Supreme Court doesn't kick Lisa Cook off of the board, so she stays. And it's also possible that Jerome Powell stays on as a governor. So now we got 4 hawks against the 3 doves on the board.
I look, the criteria for a hawk, you talked, I mean, none of those guys are hawks. The hawk is extinct at the Federal Reserve, right? If there were any hawks, they'd be raising interest rates. They're all doves. Now, you're going to talk about, super doves versus just like regular doves or something like that. But, I don't think there's any, real, guys that are hard money, anti-inflation, sound dollar. They're all going to cave, right? All these guys are going to look at the financial markets, and they're going to look at the budget deficits, and they're going to do what is politically expedient. I don't care what kind of noise any of these guys makes. They're all going to go down the path of the least political resistance. Nobody is going to, no one's going to go out on a limb. There are no Paul Volckers, right, anymore at the Fed, and that's by design, right? All these guys that are there were appointed, right, by government. So the government they don't put guys like me on the Fed for a reason.
So you think he will get the easy monetary policy he wants no matter what? Like you don't see anything that could hinder that?
Yeah, no, he will get it. The question is, how long will he keep it? Because look, at some point, right, when inflation is 10%, 15%.
I want to get a little bit ahead here to the point where he says they'll buy long end of the curve.
A lot smaller. That's what I'm talking about.
Okay. Well, thank you for answering my question there. And I would certainly also appreciate hearing you talk more about what you think like Trump's monetary policy is going to look like. Is it QE? Is it buying at the long end of the Treasury curve? Is it more interest rate reductions?
I think we're already in QE. I think we're already back. I think what the Fed is denying it, but that's the first, the first thing they do is deny it, right? And once they start denying it, that's what they're doing. So the minute they had to say this is not QE, damn well it's QE.
Sure. But like what they're doing right now, I mean, is it really enough to matter though?
Yeah.
Because like if they do it for as long as they say they're going to do it and just the
Yeah.
amount that they do, well, that only adds like 1% to USM2. So you think it will be increased more and will go on for longer?
Oh, it's the camel's nose under the tent, right? I mean, they just opened it up a little bit, but this is just the beginning. Oh yeah. No, it's there. It's going to be bigger than all the other ones combined. No, the balance sheet is going to explode.
All right, so that's what I was waiting to hear there. Is Peter Schiff thinks that the printing this time around will be bigger than 2021, 2020, and then also 2008 all the way up to 2016. He thinks it'll be bigger than all of that combined. If that's true, we're looking at like a $30 trillion balance sheet at the Fed, or at least $20 trillion. $20 trillion balance sheet at the Fed. Imagine like the ramifications of that for not just our investments, but for the economy. I mean, it will ruin people's lives. It will absolutely ruin the life of the average American. Us people that are invested in assets, we're going to be all right. But everybody else, their lives will be ruined if they do this. Now, I think the reason why Peter believes that they're going to do this here, I mean, one, he's talking his book because that's going to be very good for gold. But, I do the same thing with cryptos. I can't hold that against him. But two, I think another reason is he just views the Fed as it's all political. I mean, I'm a dove or I'm a hawk or I don't believe in QE or I believe in a little interest rate cut or I don't believe in any interest rate cuts. I believe in raising them. All that stuff, all that noise you hear out of the Fed. He says, well, a lot of that's just theater. It's kayfabe. It's like pro wrestling. So they're saying it because they just need to project an image that they're not irresponsible people when deep down they really are irresponsible people. Or they're people that are out to benefit themselves more so than the everyday American. That's kind of like where Peter's coming from on this here, is that it's all just an act. Maybe he's right. We'll see. I mean, what I can tell you, though, is that when you got two people like me and Mr. Schiff who usually disagree, when we agree on something, well, the thing that we agree on is probably pretty true for two opposing sides to agree on it there. All right. So the call so far is I can't make the call that the bull run has begun yet. I'm not saying that it has begun yet. And I got to feel a lot of responsibility for when I do make that call. It's not so much like I'm afraid I'm going to say it and then the prices tank the next day or something. But here's what it is. It's like, I mean, I know I don't really have this massive audience that is going to get wrecked if I tell y'all start buying and then it turns out it's not the bull run. It's not that. It's more so a matter of like protecting my reputation in the sense of, well, here's what it is. Like if you remember wrestling in the 90s, the best time to be a wrestling fan. If you remember Goldberg, how he had a very long ongoing undefeated streak and that was part of his gimmick. I kind of have a streak going where all of my calls have been right. I don't think I have had a call that did not come at least somewhat true. So if I make a call, a risky one like this here, is saying, oh yeah, bull market has begun, and then it doesn't happen, and prices go down to new lows, well then, there goes my streak. It'd be like if Goldberg had lost his fifth match instead of continuing to go on and win 170. Like, even though he hadn't had a big, long streak to protect just yet, even though he didn't have a lot of prestige and everything on the line, he didn't have a lot to lose, and he didn't have any championship belts yet. Had he lost his fifth match, we probably would have never heard of him, or we wouldn't remember him or anything. So that's the reason why I'm like very hesitant to say the bull market has begun yet, because got a really nice streak going here with my predictions. And the reason why I have a streak with predictions that have come true is just because of how much thought and research I put into them and how much conviction I have in each one of them before I get on here and tell you about them. So it's not a matter of, I want to be the first one to call it or anything. I don't want to be first. I want to be right. All right. But I will tell you when I believe it is the start. All right, because here's what you're going to hear from me is this. There's a play. Oh, no, never mind. The soundboard doesn't play today. Of course. I'm going to play you the Celine Dion song where she goes, and it's all coming back. It ain't going to play. But you will know when I believe the bull run has begun, because that will be the most profane stream you probably ever heard. So until then, you guys, till then, still stacking stables. That's all I got to say for today here. Good night.